July 5th, 2019, guys. It's going to be a one wild Friday. I've actually waited to see the initial response of the job report to try to make sense out of what the market is actually going to do today. So here's the deal. The expected job number was 160K. The announced job number was 220,000K. And that really is a bit stronger than what the market probably would have needed to have a substantially higher breakout. However, it does confirm the fact that there is no recession, but still that gives us a pretty good probability of rate cut, because one thing that if you study the job report numbers, they often get adjusted so easily. A number like 220,000 that's reported so far right now, next month could be revised to like a number of like 160. The importance of that is going to coincide with about the time when the Federal Reserve is going to have its next meeting, which is July 30th and 31st, and on the 1st is when they actually going to supposedly announce a rate cut. So the market is pricing in at this point probably a quarter point. There's about a 71% probability of a rate cut the way things stands now. So what we're noticing, however, despite of these initial reaction lower, and remember about the reactions, right? The initial reaction is not always going to be your true reaction, but we could say that initially, when the job number came in, market was puzzled for like 60 seconds. Nothing was moving, which was very odd. And VIX did something absolutely crazy. I'll show you in just a second. So many stocks over the last couple of days are passing all-time 52-week highs from various sectors. So that's actually very, very important, because it tells you that the market rally is broad, which is highly sustainable. Now, in the last 4 days, we noticed that there is one behavior that unites this market, and that is substantial breakouts from intraday trading levels higher in the last 15 to 60 minutes of trading. So we expect that behavior to repeat itself again today. And finally, we're taking a closer look at a few plays in the biotechnology sector, which I think is going to benefit tremendously from everything that's going on in the market right now. Specifically, we're considering ALXN calls, Sage Pharmaceutical calls, SRPT calls. I've only had time to insert 2 charts on the first 2, so we'll review SRPT, guys, in the next video. So here's what we got. Initial reaction lower. Typically, a reaction like this could result intraday in a move higher. So that's what we're going to be expecting the market to do. So basically, you want to stick to the overall market behavior, which has been buying the dip. Here's the divergence. As soon as the market announced the job data, this is what the VIX did. Pre-market, it was actually spiking to 1345. As soon as that data came out, it dropped to a low of a 1204, 1205. And so a bit of a confusing divergence here. So the market was not doing initially a whole lot, followed by a drop. This VIX behavior, however, is a bit of a warning, because it shouldn't have dropped by this much. It tells us that the initial reaction in the VIX could be pointing to the fact that the VIX could actually reverse. Now, this could be just a temporary kind of thing, and VIX eventually could just cool off a little bit and ultimately finish around the levels of 13, maybe in the 12 handle today, maybe a 12.8, 12.9. Now, overall, we would have preferred a more gradual transition in the VIX. But if you combine these 2 charts, clearly, market is going lower. What should the VIX be doing? The VIX shouldn't be doing this. Okay, it should be going higher. So overall, it's a positive, bullish divergence. Let's take a closer look at the chart of ALXN Pharmaceuticals. This is actually a very solid biopharmaceutical stock, and they're highly profitable. And now they just got a clearance to sell more stuff, more good stuff. And the chart is pointing to the fact that it could break out of a very strong consolidation over the last 2 years. Now, when stocks break out of huge consolidations like this, which take a long time frame, we're not even talking about 2 months or 3 months or 4 months. This stock has been trading between a range of about 95 and 140, 142.5 specifically, for about 2 years. Now, the internal value of the stock arguably is about $200. So this stock potentially has got a move of a $60 higher. And if that breakout comes, which we think it could this month, this could be a very nice payout right here. As a few, we're looking at the weekly chart, there's a few positive things like the forming bullish crossover in the MACD. Accumulation distributions just look even though the price has not broken out yet, but they are really accumulating the stock around these levels between 123 and 133. We'll take a look at a closer time frame on Alexion. This is what we're going to get. We're going to get this level of 142. Guys, ideally, what you want to do is you want to start buying some calls now around the price of 133. And you want to add substantially more if it does clear this level of 142.5. So don't add a lot. You can buy like just a few calls here and add a bunch more if it breaks above this 142.5, because that's the level that I was just showing you on a longer time frame. That is the level. If it does clear this thing, boy, this thing could run. And historically, I think it traded at the high of 180 at one point. So we're not talking about anything unreasonable. Once we clear this level, we can easily see like a $40 move higher, literally within days in this thing. So recently, notably, we have a series of these bullish reversal candles. Like they just keep buying. They keep buying this thing, which is quite different from everything that's been going on before in the stock. So basically, we're considering this as a significant reversal in institutional behavior when it comes to this stock. And clearly, when this thing actually had a chance to form a death cross, you're seeing it actually stalls out. And the prospects of the death cross are now not as good. And typically when we see that, stocks sometimes they'll break out higher. So the setup looks really good on this one. Sage Pharmaceuticals. Guys, look at this. What a nice, solid uptrend. Wow. We don't see this very often. Look at that. Look at how consistent they're buying these dips. Every time it gets to the blue line, what do institutional investors do? Nice. So ultimately, the best entry point would be around 172 if it does come to these blue line. But considering what's happening in the markets, considering the pre-existing conditions of these nice bullish crossover when the blue line actually crossed the orange line on the way higher, this thing is destined to break out to 200. And I think once it gets to 200, it could fly to the 250 level. Look how consistent this accumulation distribution has been. Wow. And what MACD is telling us, see, historically, MACD has been able to do some crazy things on this one. So we could be heading into a situation just like here on the MACD where we could actually stage a huge breakout. Now, knowing this information, there's not like any specific catalyst that points out to this thing moving significantly higher today or next week. So if you are buying these calls on Sage, make sure you give them some extra time. Buy like a month out or 2 months out. And it's okay going a little bit out of the money because historically Sage Pharmaceutical has done one-day moves to the magnitude of 30, 40 bucks. So if you're buying a 200 call on this one, guys, it's not really that far stretch and it's not really that far out of the money. The chart looks extra bullish, and I think it is going to break out. Now, if we take a look at the weekly chart on Sage to make things even better on the bull case, we've got this very solid reverse head and shoulders. And what's interesting, even though the price has been trending here between 160 and 180, look, it almost looks like a consolidation. Within that time frame, the accumulation distribution has actually moved substantially higher. So we've got the accumulation actually outpacing the price action in the stock. Typically when this happens, you will get a breakout to the upside. And the fact that these head and shoulder, reverse head and shoulder formation has been created again over a much significant time frame going all the way back to 2018. As you can also see from this chart, this stock is also capable of some moves that I just pointed out. Magnitude of, actually, here was your $30, $40 move. Here's a one-day move in this thing from like 80s to 170. So this stock could move historically, and I think we're about to witness something like this. I'm not saying today or next week again, but over the course of the next couple of months, we can definitely see this thing make another one of these moves to the upside right here. Okay, full outcomes of the job report. Looks like right now what we actually got is initial move lower, followed by initially it looked like we're going to this lower probability of 10% right here where things were just moving sideways, but initially we finally got a break lower. So at some point we're expecting the banks to come in and start buying this dip. This would be the day, if we look at the analog on December 2017, could be represented by these drop right here. You see this candle. Let me see if I can Zoom in here. So this could be this right here, followed by a spike higher, setting another all-time high, followed by another pullback before we go into this. So be very careful, guys. Today, the clear strategy is just to buy the dip, because everything points out, if the history is correct, that the move higher is still coming. So 100-point move higher from the 29.14. So we've actually almost gotten there to 3,006 briefly pre-market, but giving up some of these gains with this job report. So the question of the day, we've pointed out that resistance becomes support at about 29.60. And the question of the day now is whether that level of support is going to be raised a little bit, and maybe this 29.80 or 29.90 could potentially be the next support level. And so the goal for us is to make sure we close above that 29.90, 29.80 level today, and prospects of that are pretty good right now. And if we do that, I think we could easily finish strong back above 3,000 and move higher from there to maybe a level of 3,050. July 3rd was another 7. Guys, wow, this is absolutely incredible. Got 5 7s in a row. It's clear that buying the dip behavior, which is exactly what a move 7 represents, it just continues. So even though it was a shortened session on Wednesday, this is what we got. We opened higher in relation to the previous day. We sold off. As soon as we sold off, the banks came in, they bought the dip, moved the market higher, small sell-off again, they bought the dip higher, bought the dip one more time, and notably, this trade, the behavioral characteristics that we have been observing intraday continues 4 days in a row, where in the last hour, look at this spike in the volume, which coincides with this largest move in the last part of the trading session, and slightly after the markets were closed, the markets were still moving to a high of 3,006. So here's that move. The largest move coincides with the last hour of the trading session. So what could we learn from this trading today, guys? It would really pay off, especially with small accounts, to wait to trade this till the last hour, because if we're going to get another day of this repetitive behavior, your options are going to be priced the least at about 315, 330. You want to buy calls that expire today for a very quick trade in the expectation of an increase in volume and a sharp move higher going into the close. So if you use that strategy, you should do quite well today, guys. So be very patient with the market. And again, if we look at the prior days that we've shown in some other videos, this behavior has been very consistent. The largest move of the day comes in the last 30 minutes of the trading session. So we're going to use this analogy to trade the markets today. The 2-day sequence, of course, is 7-7. This is how this one looks in the chart. They're buying the dip. They're buying the dip 3 times in the shortest session on Wednesday. Another way to look at it is we continuously get in a series of these reverse head and shoulders, followed by smaller buying the dip type of activity pre-market and throughout the regular trading sessions. 5-day sequence, whoo! Man, look it. I can't believe it. 7, 7, 7, 7, 7. Unbelievable, guys. So I think the bigger move in the market, despite of the initial reaction and the futures lower, is still in the making. Okay, so times like this, just got to be a little patient. And I know we have been patient, and sometimes the markets are just not easy. They don't give us exactly what we want, guys. But overall, this is not the time to be switching the strategy. It's time to be doing what the banks are doing, and they are buying the market on every dip. So we should stick with such strategy. The market move for today is likely to be a 4, 1, or another 7. I know at the time I've recorded this, the initial reaction was lower, and now I'm not sure. I'm not looking at that screen. I don't know exactly what's going on with the futures. I'm just trying to record this and get this out to you guys. So potentially you could take some action on stocks like ALXN, Sage, and so on. But the most important thing is, if we are opening in the red by the time the market opens, we have a great probability of a 4. Now, the market could spike before the open. We could open slightly neutral to maybe slightly positive, like a point or two. In this case, we can easily get a move 1 or a 7. With that said, guys, the VIX briefly dropping to 12.05 is something that is a bit of a concern because it shouldn't have made such a sharp move at the same time. But in a way, it is a bullish divergency, so we're continuously sticking with the strategy at this point, even after this observation. VIX is numerically low. It is in downtrend, so it makes sense to buy calls in the money or near the money. VIX is likely to revisit that level over the next few days. With that said, guys, the key takeaways for today is just buy the damn dip. I'll see you guys in the next trade Monday.